Hello friends, this is David Morrison with Prosperion Financial Advisors, coming to you with a few quick thoughts about financial markets. Well, lately financial markets have continued to be volatile, with major stock market indexes down 20% or more since their all-time highs last year. Also, inflation continues to be a problem for families in the U.S. and around the world, as prices for food, energy, goods, and services have all contributed to the highest inflation we've seen in a generation. As the Federal Reserve continues to raise interest rates to combat inflation, debate still rages about whether we're already in a recession or if one is still coming. And of course, the tragic war in Ukraine continues to disrupt the world and raise anxiety levels about a longer, wider conflict. If you've never experienced this kind of thing, or even if you have, it can be a really scary time. And when we're afraid, sometimes decision-making gets tricky. Our emotions tell us to hunker down and hide, or to flee and get away from a situation that feels risky at any cost. But when thinking about your long-term financial picture, neither of these is a good idea. In the 30-plus years I've helped families with their finances, I've learned that in times of financial market stress like this, it's important to focus on three priorities: liquidity, quality, and opportunity. First, what's your liquidity situation? Are your income streams like salary or pension or Social Security adequate to meet your expense needs? How much cash do you have on hand? How about bonds? If your growth investments like stocks and real estate were down for a time, how long could you live on your income plus your cash and bonds? This is not a time for overspending. Do you have a personal spending plan, and are you sticking to it? Next, what's the level of quality of the investments that you own? Are they more risk-oriented, like many of the best performers of the last decade? Are they appropriate for the current and projected economy? How would they perform in a recession? Are your investment managers keeping up with their peers, or are they lagging? This is not a time for speculation and high risk-taking. Do your investments still make sense in a more constrained environment? After liquidity and quality, the third priority is opportunity. Major investment market drops create opportunities to purchase great companies and managers at a discount. It's likely that in the future, we may regret not purchasing some of these while they were on sale. Many great American companies are selling for prices not seen since 2019 or earlier. Consider creating a shopping list of investments you want to own or own more of for the long term. We can never pick a bottom to a market decline, but we can decide to buy when it's hard to buy, when it feels like things are bad, rather than wait for prices to rise and we feel better about it. Some of us still remember Black Monday, October 19th, 1987. I was actually on the floor of the New York Stock Exchange on the Friday before that and saw stocks drop nearly 5%. Then on Monday, stocks dropped nearly 23% in one day. It was a really scary time. But in the next 2 trading days, stocks regained more than half of their losses and ended up slightly positive for the year. What's going to happen this time? Well, I would say in the short run, markets go up and markets go down, and what we're seeing is painful, but not really unusual. But in the long term, a sensible strategy that includes a focus on your liquidity, quality, and opportunities should help you prosper. If you need some help with a strategy like this, please get in touch with us. I'm David Morrison. Thanks for listening.